Hey guys, it's Monica Bullington from the Armstrong Burns home selling team at Remax Rising. Thanks for joining me today. The weather outside is crazy, so hopefully you're inside, not getting hit by all the wind and everything. I wanted to talk to you today about buying your first home. We're getting to the point in the season when first-time homebuyer grants are coming out. So there's a lot of activity going on. Bloomington normal, interest rates are going up and all that kind of stuff. So there's a ton of opportunities for you out there. But the first step is kind of figuring it all out. And unless you know someone that's recently done it, or maybe your family's bought a bunch in the past, you don't always have that firsthand experience. So I'm kind of here to walk you through it. Get you started, and hopefully you feel a little more confident and maybe buy your first house this year. So what I did was I talked to some of my clients from last year, the first-time home buyers, and I asked them, do you have any feedback, something that you liked that I did or something you wish I had done, or a regret that you have, in the process. Fortunately, we got good, positive feedback from my clients. A couple tips I'm going to share with you, lessons that they've learned that will hopefully help you and prevent you from making the same mistakes. So I asked one of my clients, Lori, for her feedback, and she said she was talking with a coworker, and it seems that our generation, maybe the millennials or the 25 to 35-year-olds, we grew up and came of age during the whole housing bubble, the 2005, 2008 area. So we're kind of turned off by the whole idea of buying a home because everything we saw for so many years was negative and all these terrible things happening to people, losing their homes and all that stuff. So I think she's right that our generation has pause before they really want to take that leap. They don't necessarily know that they trust themselves to make that purchase. So obviously I want to help you debunk some myths, make you feel comfortable. Obviously there's been a lot of regulation changes that have been put in place to protect consumers on the lending side, and obviously realtors and loan officers alike have learned a lot from that whole period. So I think we're all a little bit smarter from that, can prevent some bigger problems. So I appreciated her commentary on that because I think she's absolutely right. It can be really scary if you don't know any better. But again, that's why I'm here. So the first thing, when you're thinking about buying your first home, there's a lot of things to consider. The first, obviously, is can you afford it? So we need to look at your what you're comfortable with. If you're paying rent now, how much are you paying? Knowing that that's probably going to go up in terms of maybe utilities, that your house is going to take up more gas and electricity than your apartment. But there's actually a lot of homes, a lot of my clients, their mortgage payments are $100 or $200 less than their rent was, and they have something to show for it, and they have equity that they're building and paying themselves for it. So it can work out in your favor, and you don't necessarily need a ton of money to get started. The lowest down payment available would be like an FHA, and that's 3.5% of the purchase price. Obviously, there's going to be closing costs and that kind of stuff, which we'll get into. But the bare minimum, you're really looking at that. You could get a USDA loan, which a lot of times is 0% down, but probably not going that route in your first home. It's good to have equity in your home, obviously. You need to think about resale. So when you're buying, if you're only putting 3.5% down, you need to consider how long are you going to be in this home. Obviously, you don't know for sure, so you might be thinking, okay, 3 years or 10 years, this is I'm not leaving this house. But you need to think about, when you turn around and sell it, you need to think about, you're going to have commissions to pay. You're going to have transfer fees and taxes and all that kind of stuff that you're going to pay. So you need to make sure you have enough equity built in your house that not only can you sell it and come out ahead, but obviously you want to purchase your next house. So timeline is really important to make sure that you're thinking about future you. And I always, Tristan, my husband and I always think, oh, this is future Monica's problem or future Tristan's problem. Not house related like that, but you always kind of want to think about yourself in a couple of years. Don't get caught up in, what's exciting now and will be a lot of fun, but then, oh no, now I can't resell this house. And a realtor can kind of help you think longer term too, because it is easy to get caught up in the excitement of buying your first house. So also consider, your job. Is it a company that typically, there are job opportunities in other cities or other states and that kind of stuff? Is that a possibility for you? That goes into the long-term, future planning as well. Of course, you may not think that you're going to, and then you get a really awesome opportunity, and now you need to sell your house. So that's why having as much equity in your home as possible is the best. Conventional loan, you can do less than 20% and still get a conventional, but you're going to be paying private mortgage insurance and stuff too. And so there's always more fees that you're not maybe thinking about. So that's where a realtor and a mortgage loan officer comes in to kind of help you. I'm wondering, I hope you can read my email address back there, because I'm just realizing that it looks like it's backwards to me. Anyway, oh well. So the next thing to consider, obviously, is what you can afford. They typically say your mortgage and insurance and taxes, all the things that you're going to pay monthly, are about a quarter of your income. This is kind of tricky for a lot of people.